Thank you to the GBBC for hosting us today. Exciting times, right? So despite the volatility in cryptocurrencies over the last year, it turns out that Bitcoin was the best performing investment in the last decade. And just the last year, we had the big Libra announcement by Facebook. And governments around the world are developing central bank digital currencies. I mean, wow, right? I've been a financial journalist for over 20 years and just recently joined CoinDesk. And the reason why I joined CoinDesk is as a storyteller, I really wanted to be on the front lines of this exciting evolution, or more like a revolution, right? Like that's the title of this panel, the revolution of money and the future of the global financial system. So I am so proud to be here with this distinguished panel. David Treat, Managing Director and Global Head of Accenture's Capital Markets Blockchain Practice. Christopher Giancarlo, former Chairman of the U.S. Commodity Futures Trading Commission. Ed Vaizey, former UK Minister for Culture, Communications, and Creative Industries, and now a Senior Advisor at FTI Consulting. And Dante Disparte, Vice Chairman and Head of Public Policy and Communications of the Libra Association. So welcome. I have to start with Christopher and David. You're partnering together to create a digital dollar. Have you gotten the Fed governors and Federal Reserve Chairman Jerome Powell completely on board yet?
Well, one thing you do as a former regulator is you don't talk about private conversations with regulators. What I would say is I think if you read the public statements of U.S. officials, I think there's a recognition that directionally the digitization of currencies is both ongoing and that is the direction of the future. And what we're seeking to do with the Digital Dollar Foundation and the Digital Dollar Project specifically is start the early thinking about what that looks like. There are elements of a potential future digital dollar that will be common to other central bank digital currencies, and there will be elements that will be very unique to the United States. And we want to begin the process of, in the areas that are common, thinking about what are the different choices and what might work better, what the different pros and cons are. And for those that are specific to a U.S. dollar, a tokenized U.S. dollar, what are some of the hard choices and some of the trade-offs that will be present there? So we're trying to get out in front of a direction that we think is inevitable down the road.
Definitely want to get more into that a little later. But David, China is expected to launch its digital yuan this year. So can you give us a sense, both of you, I guess, a sense, a realistic time frame for launching a U.S. digital dollar?
I think, Chris, you've actually been really eloquent over the past couple of days. The important part is to get it right, not get it fast. And I think Chris was asked yesterday in an open forum there was a poll as to which was going to move first, and I thought your statement was spot on. Of there is no chance that the U.S. goes first, right? So I think that's a safe bet to make. And I'm now parroting your comments.
What I would say, I think it would be foolish for the U.S. to go first with the predominance of the U.S. Dollar as a reserve currency. There's almost everything to lose and little to gain by getting it wrong. There's much to learn by how other countries proceed in this area and see what choices they make. And so I think it makes a lot of sense for the U.S. not to go first, not to go fast, but to go slow, go deliberate, go thoughtful, go intelligent, marshal the best minds, and to do it in a typically American style, which would be a public and private combination. If you look at NASA, if you look at the development of the internet, all the big projects technologically that have been done in the United States have been done with bringing in that beautiful melange of intelligence, mindfulness, of project management that the private sector has been able to do, along with public sector thinking about what's in the best interest of the country. And so what we're trying to do is marshal private sector minds together so we can start thinking about this from a long-term, thoughtful, intelligent way. And it's one of the reasons we're doing this on a non-for-profit basis as well. The Digital Dollar Project is not a commercial enterprise. It's an enterprise we're doing not for profit, but what we believe is in the long-term public interest, and not just of the United States, but of the global economy.
I think it's also important, we've been fielding a lot of those questions of China versus US, and I think it's important to put it into the wider context. I actually have my dedicated CBDC team is here right now, John and Usman. They've been engaging with central banks around the globe, and some very public, like Sweden and Riksbank with a recent announcement. Some not so, some privately. But I think the medium-term end state, and you put your pick your time frame for that, is inevitable, right? That there's too much value in the construct of in our ever-increasing digital world to modernize this third form of money and make it effective for our digital world. There's too much value that I think the medium-term end state is inevitable. I think all central banks will go down this path. I think the major question is not who gets there first, and it's not a zero-sum game. It's who does it, to Chris's point, who does it right within the context of their own societal values, regulatory constructs, their own ecosystem and how they relate to the rest of the world. And I think that's where a lot of the creativity and a lot of the really interesting conversations will take place. But I think it's all boats rise. I think it's an inevitable solution construct. I think it's the question of how fast, not if, and not one winner, one loser kind of dynamic.
Well, there's a lot of growing conversation around stable coins as well, right? And the announcement of Libra in 2019, I would say, is arguably the most significant news in this industry in a very long time, if not the biggest news. Well, it certainly got the attention of global and policy and regulators around the world. Dante, can you give us a quick status update on where we are? Can we expect a launch in 2020, or has the timing been pushed out?
Well, first of all, it's great to be here, and I think anybody who has been tracking this conversation since the beginning, right? And you have to argue that the beginning is the 11-year-old Satoshi white paper that espouses some really, really powerful ideals, many of which have not been fully realized, in part because early adopters of this asset class have realized that many crypto projects have had wide entrances and very narrow exits. And that the narrow exit, often the first friction they run into is the regulator. It's the lack of alignment from the regulator. It's the set of common beliefs and misperceptions that all of this stuff is criminal, all of it belongs in the shadows, everything is about contravention of the system. And so to hear, Chairman Giancarlo, and to hear the conversation that in no small measure Libra brought to the main stage start to take hold, one in the Senate, two in Congress, and every central banker on the planet now has either a pilot project in process or in design, or a CBDC expert, self-appointed perhaps, but a CBDC expert nonetheless. And so in that spirit, I do think, notwithstanding the fact that we are ourselves a 7-month-old effort, right? So we're a startup functionally. Much of what Mr. Giancarlo said and David said is aligned with our own posture. Better to get it right and not run a science experiment on the planet or the types of people we're trying to serve than to get it fast. But we do think there's an enormous opportunity with the type of core infrastructure Libra is building, and with a vision of creating infrastructure that's public-private, creating a technology platform that's open source. This, to me, is an all ships rising moment where we could fulfill some of the original promises that this space was designed to support and functionally answer some really hard philosophical questions. Is it really your money if you have to ask someone to send it? And is it really your money if you have to pay someone to hold it? So the thing we're trying to solve for is payments and the lack of interoperability in payments. All of the other narratives and all of the other storyboard that Libra is out for central banking and out to disrupt things, far from it. Spent my life trying to make the global system more resilient and more risk-proof and prone, and I'm not going to be a part of anything that would disrupt it.
And
Libra deserves a lot of credit, along with Satoshi and the white paper, for actually getting us to think about what is money in a digital world. What is the role of fiat as an analog component of a digital global economy, and where do we want to go from here to enfranchise the disenfranchised, the unbanked? How do we want to move money around the globe so that we can continue to see people rising into middle class and less developed economies, so that we can empower our own currency to do more good around the globe? So I think in a lot of ways, the work that Libra's done and others, we've come to a new moment now where we're rethinking things that we haven't really thought about much for the last 50 years. And I think that's all for the positive good.
And I want to get you in here. CBDCs have been discussed for years. What makes the conversation stakeholders are having today different?
Well, I think it's partly, obviously, Libra, but it's been a long time coming. I mean, the Bank of England has been looking at cryptocurrencies for the last 5 years. You can find numerous papers going back 5 years. And it is a fascinating debate, and it does feel like we're moving to a new phase. Whether that means that something real will happen is one thing, but it certainly feels like policymakers are getting aligned and discussing what the next steps are. I'm told that today the Bank of England is going to announce that it's in a consortium with 3 or 4 other central banks to look at central bank digital currencies as an alliance, if you like, and obviously it's already published papers on it, while saying obviously that the bank is not intending to issue a CBDC anytime soon. I think this whole debate is fascinating. If you go back to kind of first principles to do with how technology is disrupting pretty much everything we do, it seems to me in principle that of course technology could and should potentially disrupt money. But there are obviously very big issues at stake, because from a policymaker's perspective, of course, money is at the root of your sovereignty. And indeed, coming from a country which has just voted to leave the European Union, one of the factors behind that, I suspect, there are many factors, was the single European currency and the recognition that the further down that road you go as a group of nations, the less sovereignty you have as an individual nation. So the stakes are very, very high. And it's interesting as well whether you can, whether there is a first mover advantage or not. I think I agree with you that there is not a first mover advantage necessarily. It's not necessarily an Amazon versus Walmart moment, because in theory, when the US chooses to move, the US will have all the power, but nevertheless, it's still worth thinking about. And I think it's also worth thinking about what we really are talking about when we are talking about a digital currency or a stable coin, for example, because on the one hand, of course, what Libra and the whole debate has done is to move central bankers' attention to payment systems and the fact that people are moving away from cash. And in countries like Sweden, 90%, I think, of all transactions are now digital transactions, and a whole host of policy implications that arise from that in terms of making inter-country financial transfers easier through to the unbanked. But there's a big leap forward when you start talking about a central bank digital currency and the implications for the banking system, for credit, for loans, for the circulation of money around the economy and the many ways that's used. So they are, to a certain extent, separate but related debates.
And I was just going to add one quick point. Having almost had like the world's focus group on CBDC, from central banks that are really serious about it and deeply into it, and others for whom they might have learned on June 18th what a CBDC was, or courtesy of one of Accenture's great white papers, is that much of the conversation, and I'm sure this would be true of the Fed and others. In fact, the Fed gave a speech not long ago outlining that there may be interesting opportunities, but it would happen at the wholesale level. And to me, that's incredibly compelling. It's a demonstration that, again, these two ideas are not mutually exclusive. The last mile and the retail level opportunities remain wide open space. And if you think about what Libra is trying to do with that, in that sort of bracket, it's about tearing down the walls that make current, even very efficient payment systems walled gardens. And the second you try to pay across that border, a PayPal user can't pay a Venmo user, for example, notwithstanding the fact that they're both owned by the same firm. PayPal owns Venmo. And so if you build a network that is interoperable and allows for low friction payments across these types of platforms, then I think you have a world in which CBDC can exist, but also support last mile opportunities that would drive the business case for financial inclusion and cutting out cost from the system.
Yeah, it's part of our journey and part of the reason why 4 or 5 years ago we formed the team and we made heavy investment in this space was as we looked at the influence that distributed ledger technology blockchain would have on a variety of different use cases in different contexts, we kept coming back to the value of tokenized cash for those use cases and you know, whether or not it's the direct exchange of tokenized cash versus tokenized securities in a capital markets context, the payment, whether it's wholesale or retail, the remittance, the cross-border payment, you know, various use cases and facets to it, kept coming back to core functionality that was required and value that was unlocked through this capability. The other learning that came out of it, and I think extending on Dante's point, is it doesn't necessarily have to be the same thing for each. And one of the things that we're going to do in a very deliberate manner is bring together a multi-stakeholder group to think through each facet of those use cases, the user groups, all, you know, from the consumer advocacy point, an ethicist point, from a constitutional law point, from a regulatory point, from each tier of the banking system, and you know, it'd be very challenging in thinking through, you know, a more narrow definition of what is a central bank digital currency, where is there a place for a stable coin and the like. And if I do, you know, what I've found to be a phenomenal tactic of use my family as help in this, right? I was able to explain to my parents, you know, kind of, you know, how would this impact them? Because that was one of their first questions. So like, well, when can I? They wanted it. They were like, when can I have one? And I was like, well, hold on, let's back up. You know, and drawing the distinction, the one example I keep going back to is I doubt that it will be a relevant part of the conversation to go to the Fed or the Fed or the Treasury and say we want to take advantage of the programmable nature of what a tokenized version of cash could be, and we'd like to modernize the food stamp process, right? Food stamps, you know, a paper token to enable on a benefits distribution basis, people who need it to go get milk, eggs, cheese, get food for sustenance. It may be much more natural to take advantage of a stablecoin construct where you have a very specific purpose, a very specific construct, very specific set of business logic, different stakeholder groups, and drawing upon the same underlying foundation, go use case by use case, and really distinguish and be more narrow and specific about our language as to what we're using in what context and why.
Well, will CBDCs or private stablecoins ultimately be the end of cryptocurrencies?
The short answer, no. I think if you think about the experimentation, and you really have to treat it that way, right? The last 11 years of this asset class and this innovation and what blockchain is now starting to do as it was handed over from small technologist teams to the enterprise blockchain domain, and I'm sure it's created a lot of job security for our friend David and many others, which is good. I want your job security. What you've seen in that round is that we're now moving into a very, very real realm. As an example, I serve on the Federal Emergency Management Agency's National Advisory Council, and to be able to submit a set of recommendations around the use of blockchain to help support disaster relief and speed up the identification of a potential beneficiary in these things, we needed those last 11 years to make these types of recommendations credible. Mr. Giancarlo would have a hard time convincing the Fed that any of this stuff is out of beta unless we had those last 11 years. So we have to pay real serious homage to what has transpired in the space and all of the incubation, the radical ideas, the innovations. But we also have to realize that even amongst the most radical crypto utopians, the idea that people should have self-sovereignty, that people should really own their assets, and that digital twinning can be a real thing without being a threat or a contravention to the rules-based system, that's an important concept. In no small measure, because the way we run things has reached its point of diminishing returns. We have 1.7 billion people without a bank, 1.3 who are underbanked. 50% of the American households can't withstand a $500 setback. So short of large-scale, trusted digital transformation, I don't know of a better way to pull more people into opportunity.
And Dante takes us back 11 years. Let's take even a broader historical approach. The predominance of the US dollar as a global reserve currency that we've experienced over the last 2 or 3 generations is really actually unprecedented in global history. At more times in history, there's actually been a prevalence of various different currencies used in commerce, And not all of them issued by nation states. We've had joint stock companies issue currencies. We've had railroads issue currencies. So in most of human history, you've had a balance, or at least a multiplicity of different instruments. And if you look at the period of the European exploration of North America, multiple currencies were used throughout the east coast of the United States from different nation states, many European, Dutch guilders, French francs, the English pound. Interestingly, from the 1600s to the 1700s, the most desirable currency was the dollar, but it wasn't the American dollar, it was the Spanish dollar. Of course. And the reason why the Spanish dollar was actually considered the one to have, even though many were in use, is it actually had a couple of technological advantages. One is it didn't use European silver, it used New World silver, which was more consistently pure than European silver, and therefore the consistency of the Spanish dollar was considered better. But the other part of it that's very interesting is it was minted in a way that could be equally broken up into 8 pieces, known as pieces of 8. Therefore, it could be fractionalized. And when we think about digital currencies now, one of the advantages is fractionalization. So technological advantages of one instrument over another were often distinguishing characteristics. And many currencies used in global commerce were also the norm. So we've had this period of time where we think about nation-state currencies as the only form of currency, which is relatively unique. We think about one as being predominant, and personally I think, the world has benefited from the dollar's prominence in global commerce. I think there's not just coincidence, but I think there's correlation, that the period of globalization of regional markets into one global market, what we used to call globalization, that's taken place in the Second World War, has coincided with the dollar. So I think there's a good reason for the dollar to remain that, but I also think that historically speaking, one shouldn't expect that there would be only one instrument in global commerce or one instrument offered by nation states. At least historically speaking, it's been more vive la différence rather than...
Absolutely. I think that's a great tour de raison. You've sorted out my dinner party chat tonight. I'm going to look unbelievably impressive wherever I end up having dinner, particularly the pieces of 8-bit, which I love. But to a certain extent, I keep coming back to the sovereignty thing. So the great thing about coinage, for example, particularly in Anglo-Saxon Britain, is you can trace who's up and who's down in terms of different kings. And the minute you were on the march to take over, you started to mint your own currency. So that is perhaps why Libra has attracted so much attention, because one of the aspects of Libra you can't get away from is who is behind it and the brand behind it, and whether this is simply another Mark Zuckerberg play to keep more people on his platform, or whether finally Facebook is going to become a nation state with 2.7 billion citizens. So of course, in theory, digital currencies and stable coins, private and public sovereign coins, will take over from crypto and Bitcoin, because they're very different things. Bitcoin is an asset that you invest in, like gold, and in theory, there's no reason conceptually why Bitcoin shouldn't be like gold. If we decide that some funny-looking metal that we dig out of the ground is going to be a store of value that's going to go up and down depending on the circumstances, we can decide that a series of ones and zeros can be a store of value. But digital currencies and stable coins are very different. What I would say about Libra, and you've got this, you've got the Swedish governor, for example, saying Libra is a catalyst, is this point about the unbanked, which I think is really a valuable point to make, because it's a great challenge that is being laid down to central banks and governments. In the same way, this will sound very weird, in the same way pirated music was a challenge to music companies. If you can't deliver a good in the way people want it and need to use it with the technology that is now available, you will be challenged. So there does need to be a response of some kind from central banks and policymakers. Whether the two can coexist in the future is open to question, but there's no doubt that the challenge, actually, when you take a step back, is very welcome.
Do you think the digital dollar will be built on an existing platform, or will a whole new tech system need to be built?
Well, that's something that at the Digital Dollar Project we would like to explore. Way too early to say, but certainly being able to use existing technology or new technology would be something we'll be spending some time with some thoughtful people thinking about.
It's kind of part of the natural partnership with us is we're not a product company. So part of what we do is evaluate all of the variety of technical solutions and platforms existing or envisioned, and help drive that selection process. So we'll be bringing that ethos to it, and really also then deep technical capability to test them, because there can be no question in this context of performance and capability and scalability, et cetera. So that's key. I think if I extend your question and then draw upon some of Ed and Dante, your comments in particular, I think the other thing that's incredibly important to include in the conversation is other core enabling technologies. And to Dante's point about the retail end of the use case spectrum, our other main focus this week while we're here in Davos is digital identity. As another foundational aspect of this is to be able to have the self-managed identity construct, to be able to have a wallet infrastructure into which you can hold these tokens of variety of form, to be able to know with whom your counterparty is and the dynamics within a business flow, to be able to take control of our own personal data in new ways that is incredibly both empowering and unlocking of new key value. That's critical. And then a topic that also pervades both from a confidence perspective is custody of tokenized assets. And it's another major focus of the team around, we've had a legacy within financial services in particular of high security, right? Throughout its entire course of history. And in the digital form of late, over the past couple of decades, that's taken the form of very intense hardware security module-based, vault-based mechanisms to store ATM PIN infrastructure and the like. And the ability to bridge that high security context and capability with obviously the high availability need is another key focus area, to be able to create new technical platform infrastructure to support the wallets into which they can be held, the identities with which they can be associated, the confidence that whether they're at rest or in motion that they are not going to be lost, and then of course the core capability around what a central bank digital currency or stablecoin, the token itself is. The combination of those things is critical in this. You can't just look at one facet.
I think that's absolutely right. And I think I said at the last panel I did on the blockchain that I had the distinction as when I was a member of parliament, I think, of being the member of parliament for the first and I think only person in the UK to suffer an armed robbery of his Bitcoin. So somebody turned up at his house and stole his hard drive with a gun. So that's a security aspect. We also have to, there may still be traditional ways of stealing people's money, even in a digital world.
You can count on it.
But these people, these I was going to say throw-offs, but they're not. They're absolutely central to what we're talking about digital identity, for example, are absolutely at the heart of all of this. And it's going to, so this whole discussion is going to throw up a huge debates and important debates, which will have much wider implications than simply currency on digital identity, but also on regulation as well, which is why, in many ways, it's so exciting.
I was just going to have one quick point, and I think it builds on exactly what David was saying about the need for better standards around risk management and these other issues. But I think the thing that will really unleash the multi-billion dollar sort of economic opportunity here is regulatory certainty. And I've never seen a wave of technology innovation quite like this one that is operating in, for lack of a better term, havens or small environments that are providing absolute regulatory clarity on the asset class. Whereas earlier tech waves were asking for permission or forgiveness rather than permission, this time around you're seeing a lot of blockchain operators saying, give us permission. We don't want to ask for forgiveness. We don't want to learn ex post facto that it's a security or that it has to be taxed at every transaction, and so on and so on and so forth. And I think that to the countries that get this right, and hopefully it's harmonized, there is a multiple hundreds of billions of dollars of economic value, stranded assets, opportunity, digital identity. The narrative of how this will change the world is a long one. Many have heard the story forever, but the missing link in this puzzle is regulatory certainty.
So
And
you
as
think
a recovering regulator, perhaps
You never recover from being a regulator.
let me talk about why that is, because I think you're absolutely right. This time it's different. Beware those words, but I think this time it is different. I'll tell you why. The first wave of the internet, the first wave of digitization was about the digitization of information. And in the United States and many Western countries, there's a long tradition. In our case, the First Amendment to our Constitution provides that speech is a government no-go zone. Speech, information is traditionally an area where governments have been reined back, have limited ability. But once you start talking about people's money, governments have been in there from the beginning and will be in there to the end. Banks have long been regulated. Marketplaces for the exchange of things of value, long been regulated. Government, it's got its claws into value protection, and the peoples of our democracies have demanded it. So they are rightfully there, and they are not going to yield easy. And take that a step further, that role of government has manifested itself in legislation that is old. In the United States, most of it was created in the 1930s following the financial crisis of that time, and at the state level goes back even further. In the UK, a lot of it goes back at the Financial Service Act of the 1980s, and others. Some of this legislation is old, it's voluminous, it's detailed, it's complex. And what have we got now? We've got this sudden explosion in the digitization of value, and it's running smack headlong into a regulatory state that's long. And the other thing about regulation is it's designed to intermediate. If you think about the way regulators approach any ecosystem, whether it's healthcare, whether it's banking, they look at the ecosystem and they say, okay, who are the intermediaries? Where are the bottlenecks? Okay, fine, you're registered with us. You supply us with information. We're co-opting you. So regulators intermediate spaces, rely on intermediating, and here comes along a revolution, in many cases disintermediating. And so there's challenges in this. And so you're absolutely right. This time around, the notion of don't ask permission, ask forgiveness is just not going to work. This time around, engagement with the regulators is critically important. And I think done right, and we at the CFTC worked hard, Project Innovate, which you probably had a hand in, is a perfect example of how regulators can open their doors to innovation, learn from it, and then adapt to it. So it can work, but it's got to be done right. And the innovators that come along saying, we're just going to talk to the regulators last, are going to get that wrong.
I want to ask people who know what they're talking about, which doesn't include me, what do you think about the two arguments against a CDBC or CBDC is bank lending. What's the impact on bank lending? And what's the impact on privacy? If we go to
You stole my question.
Oh my God. I'm so sorry.
No, that's okay.
I'm going to pause.
No.
Yeah, so I'll take it in reverse order. On the privacy aspect, the core to the design, right, is what. It's interesting. The technology enables.
You have to pay your taxes under this system.
Absolutely.
It's really annoying.
And if you take so again, going back to the whole framework of thinking through use case by use case and narrowing in and being more specific about what we're talking about. In the case of central bank digital currency, we're very specifically talking about a third form of official central bank money. It has a new form. It has new functionality associated with it. That functionality then engenders choices. And values that, again, country by country will play out in different ways. In a U.S. context, and as Chris was describing the Fourth and Fifth Amendment, and the values from a U.S. financial ecosystem perspective, the choices I will assume, and we will test, but I will assume that we will configure those choices in those platforms to ensure the commensurate degree of privacy and self-managed control that you have in the other forms of central bank digital currency now, largely being paper and coin versus account and message-based formats of it. So the fun for me, the fun part about all of this is that the technology unlocks incredible options, and the technology in this aspect is not the hard part. It's the ecosystem governance and policy and social value consumer advocacy choices that we'll make to then configure those platforms to meet them. So I think we are often too binary as we think about these technologies, where you see one flavor of it in one form, and you make wild assumptions and attribute that flavor to the rest, and it's not, and so it's a configurable aspect to it.
I just want to address the one thing that David touched upon, but I just want to extrapolate on that a little. Should we be able to develop a digital dollar, a tokenized dollar? And it competes against a world of both central bank digital currency and commercial digital currency. The U.S. digital dollar could have an advantage that could be, I think, very compelling the world over. And that is the United States government is restricted by our Fourth and Fifth Amendments from taking people's property without due cause and just compensation. Jurisprudence can be built around there where one could actually have a high degree of confidence that the federal government will never mine their commercial data and will not mine their personal data, except for in the case of, say, criminal activity or illicit activity. And compared to, say, other nation states that deliberately wish to know where your money is being spent, or commercial enterprises that wish to know where your money is being spent, the United States may be an option that may have built-in privacy protections at the constitutional level that are even superior to, say, statutory level, that I think could make it a very compelling instrument in a global marketplace of instruments.
So I was just going to add a point. I mean, part of this dialogue, especially the one with the regulators, has to really calibrate the spectrum of events that people have in their minds when they think about emerging technology. So if people talk about AI, the end state, the doomsday scenario is the Terminator and HAL 9000. When people talk about blockchain and cryptocurrencies and digital assets, a world of total circumvention of financial norms, of compliance, of sanctions regimes, and so on and so on and so forth, and then ransomware is an everyday event. But there's also a middle ground, which David hit on perfectly, which is that you could build a 21st century payment system or token or new security and so on and so forth that is conforming to the rules and the regs, and that is a privacy by design approach and so on and so forth. So, you know, what we've seen, at least in the experience thus far, is the regulators with whom you could have the best conversation, have a technology neutral approach, they regulate the activity, not the tech, and we've also tried to push them a little bit on regulate the economic behavior of the asset and don't create a catch-all approach where everything that is digital or everything that is crypto is one big broad brushstroke. So if it behaves like a security, it's a security. If it behaves like a payment token, it's a payment token, and so on.
On your first question around bank lending, I'm going to generalize it a little bit just to play to my own background. With the whole wave of distributed ledger technology and blockchain initially hit capital markets, right? The kind of the underinformed, enthusiasm, and I'm sorry, I should be very grateful to it. The enthusiasm of the startup community rocking up to the investment banking community and saying this is all about bilateral instant settlement, and the capital markets crew basically sat there and said, yeah, well, that's a disaster, right? Nobody wants that. When you play out the dynamics of capital markets, you need the liquidity of in many respects. We're an industry built upon selling what you don't own and buying what you don't have, and reconciling. And the market makers, a market maker goes throughout an entire day, racking up huge buy and sell positions and netting them out at the end of the day. And if you had to actually clear, settle, close each individual trade, you'd lock the market, and we would crash the system. Right, you need to have that ability to net and compress trading activity. I think bank lending. We can draw the analogies across various product platforms. The thing that we have focused on is at the moment when you're ready to settle that exchange of the cash and the asset, after having net and compressed, after having cared for the ecosystem and liquidity and product dynamics of whatever that business flow is. It's the power that at that moment when you're going to do the exchange after it is the right moment to be able to then strip out all of the counterparty risk in that moment is a material advantage. I mean, in the U.S. context, I may get these numbers wrong a little bit. But I think that right now there's more than $50 billion locked up in the margining requirements for the equities market. I think there's more than $160 billion currently locked up in the derivatives and treasuries market, where it's it's initial margining for non-cleared instruments. This is dead money. It's locked up in the system, and for an industry who's suffering, who's trying to continue to build back to a return on equity, state that's that's more acceptable, to be able to potentially unlock this massive amount of trapped value and reapply it in more productive ways is hugely compelling. Now, to me, on a personal level, this is the side of my job. I would much prefer. I overweight my personal focus on things like Dante gets to focus around financial inclusion and some of those aspects. But in core financial services infrastructure, there's material value that's just trapped that this technology can unlock. And so the whole notion of tokenized cash, it's not applying a blanket, broad brush stroke of it. It's got to be a precise use, being very respectful and deliberate about the business flow, the market dynamics, the roles of the players, the ultimate outcome and intent of the ecosystem.
Well, another example is just think about the tens of billions of dollars of remittances that go outside of the United States every day to populations around the globe, often in developing countries, for which the privilege of sending money back home to their parents and children is charged at anywhere between 17, in some cases 17%. That's money that is not feeding people. That's money that is going elsewhere. And that could be resolved in a very direct way by the ability to just simply email or text money home.
Well,
So,
and if I can, because when people say remittances, they think of the developing world example, for which it's the most important cash flow on the planet, biggest on the world, biggest in the world as well, but bigger than FDI and ODA. But I'm from Puerto Rico. Post Maria, Hurricane Maria, sending $1,000 to the island of Puerto Rico, both sides of the payment spectrum are KYC'd. It's a $30 experience if I want the $1,000 to arrive the next day. This is usury, and we're plaguing the people who could afford it the least, pay the most for basic financial services.
Absolutely right.
and you can take that even further. After a disaster like that, with a digital dollar, but other digital elements, the ability to micro-target, to simply say, the money's on your phone, go buy food in the event of a crisis. I know your bank's shut. I know the post office is shut. I know everything's shut. The money's on your phone.
These are all positive, but for Dante, for Libra Association, how do you convince an increasingly skeptical public that Facebook and other member companies are not going to be mining their data? All these privacy issues are of top concern.
Yeah, you're spot on, and I think the first, many didn't like the initial messenger, but liked the message, and I think you hear that on today's panel. And if you stay for the next panel, not to give a senseless
That is not
plug.
a personal statement, though, because we loved you.
It's okay. The irony I found was that when people were texting me on WhatsApp, "What did you do? You sold your soul." I found it ironic that they were conveying that on a two-way secured encrypted platform. But nevertheless, I think
They should have sent it on Signal.
to answer the question very seriously, I think the way to ensure trust in this new institution is very distinct from trust in any one particular member or actor in the institution, is governance. And I don't say that lightly. So this technology, from the moment it was announced, bearing in mind that the Libra blockchain is in testnet, has been open source, step one. When was the last time a big tech firm committed code and capital and this kind of initial incubation to the market in that manner? Step one. Step two, every member of the project is empowered and endowed by our sort of constitution, for lack of a better term, with the same weight, power, privilege, et cetera, as Facebook. This is alive and well. As the vice chairman of the project and as the person, along with my colleagues, who's sort of steering what democracy looks like on internal decision making, those votes are being exercised. The nonprofit partners like Kiva and Women's World Banking and Mercy Corps have a lot of weight. And frankly, their weight, in many respects, matters if we want to stay true and keep the rudder of this project bent towards financial inclusion. Having those voices in the room with a vote is incredibly important. That voting system, when we get to scale and we have 100 members in the association, we have a regulator looking over us, and we have the common interests of the public as another gateway, that's the only way to ensure any particular company is put in check, and to ensure that this becomes digital commons, right? That's the real sort of end state that we're envisioning. And remember, the association is not operating at the retail level. Around us is an exciting ecosystem of technologies and entrepreneurs and banks and a whole host of other partners that will build digital wallets and supporting solutions. They're the ones that also have to act in a conforming manner, in a responsible manner, and subject to the jurisdictions and the regulations in the countries they're operating in. So that's the only way. Don't visit the sins of the father on the son would be my last line on that.
Yeah, you know what, I absolutely agree. The challenge is going to be governance. And the good news is we're really good at governance. You think about the U.S. context. We've got a regulatory system that's quite comprehensive. We've got self-regulatory organizations, whether it's FINRA, it's NFA over on the derivative side. We've got state, we've got local. Some people may say we have too many layers, but we certainly know how to build governance structures. Now, we probably have to build them anew. We'll take some antecedents of the old, we'll have some of the new. But I think that
They're not always effective, though, governance structures.
they sometimes fail. They sometimes fail. And you have to ask yourself, because regulatory structures sometimes fail, do we not go forward with innovation, or do we simply just keep working to get those regulatory structures right? And I think that it's got to be the latter. And I think we need to repurpose. You know, as I mentioned before, our regulatory structures are old. They're due for an updating anyway, even if the innovations weren't coming. But they're especially due for an update now with the innovation coming that is coming.
I think there's also, this is not the right forum or place to do it, but there's also a really exciting part of the technology side of this to give that optionality around being able to have privacy-preserving techniques. The mere fact or core nugget of shared data infrastructure, shared business logic, the transparency, the control options that are there if you design it in the right ways, the variety of architecture patterns that are emerging. There's some really incredible work underway by a whole bunch of parties, and a lot very much in the open source domain. All of that is going to create, I think, is creating incredible options to have effective privacy design from the start and clarity as to exactly who is accessing what. I think in our prior period of tech innovation and explosion, the winning digital business was the one who could accumulate the most access to the most data, no matter how they got it. And that was a little bit of the Wild West of data, and that's how we've ended up in our current infrastructure of massive redundant sets of data, and we're applying AI and machine learning off of derivatives of that information and the like. I think the period that we're moving into is the one where the winning digital business creates the most trusted relationship between them and the individual, or bank to bank, or whatever the combinations are, and there's tech to now support the ability to do that, and the ability to be able to prove that I was meant to receive this data. I'm meant to hold it. I'm meant to apply it. Here are the intent, rights, and obligations. I intended to give it to you. I gave you a set of rights with it. You have obligations back to me. We can audit that. We can control that. The tech infrastructure can support it. So that winning digital business of the future is the one that creates the most trusted relationship. And again, the tech also provides an ability to end that relationship. So there's a whole tech depth to this that is going to be a huge enabler and a big part of the configuration and the options.
So keying off that, so how do you all see this new world of competing digital currencies coexisting? Or does it or is it just everyone for himself? I mean,
Fitness for purpose, horses for courses. And that's the way it's historically always been. And I think my guess is that's the way it's going to be in the future.
Well, and this gets a little bit, not to go back to the beginning, but I think the geopolitics discussion should be carried forward a little bit longer. That while absolutely we are not in a zero-sum world, but if you think about the challenge of the 5G war, for lack of a better term, and the concerns in the West about privacy issues and other issues when hardware and software starts to get commingled, fast forward to 5 years from today, and a world in which digital payment alternatives are not only not conversant or conforming to sanctions regimes and certain standards of control and regulation and so on and so forth in the financial system, it's going to be a very, very hard place to convey any type of monetary policy, any type of risk management policy, and it's going to erode national security issues. So in that world, what I would like to see, as someone who spent a lot of time in the national security world, is a vigorously competitive private sector, where we're not precluding any actor from participating, and that's part of, I hate to say it, what Libra evoked was the innovation is great, but we don't want you particularly, and particularly the parent, sort of the incubator of the project involved. That's a dangerous space as well. And I think this project has in part evoked an interesting conversation around the state of play of private sector innovation.
Can Libra operate in China?
Sure, Libra, to the extent the Chinese market and Chinese wallet developers and others build it up, why not? Remember, the association's job is complete we've built great infrastructure and great code and great technology that supports billions of payments, And then there are alternatives for consumers to opt into in their local environment. So the short answer would be, why not? The question, I think it gets to, would you want state-backed dictation at the governance level driving how these innovations are being designed, picking winners, and then having a very narrow set of operators with very different sets of standards and value systems build networks at scale to the world? That's the risk.
I mean, this debate is taking, I mean, you're quite right to bring the geopolitical point in, because this whole debate is taking place at a time of the sort of decoupling of the Chinese and US economies. And we don't know how long that will go on for, and we don't know how far and how deep that will go on for. So the reason that Libra couldn't operate in China, in theory, is because the Chinese government will ban it. But on another point, in theory, for a private currency, for the sake of argument, this is a great opportunity, particularly if the two kind of superpowers are not talking to each other or talking less to each other and trading less with each other, and China is intent on creating its own, as it were, digital currency to compete with the US dollar. And to a certain extent, I'm obviously deeply patriotic American, but there is an element of some of this debate also taking place in the light of 15 years of, effectively 20 years of the US government weaponizing, if I can use that word, the US dollar post 9/11 for, in some cases, legitimate reasons, and in other cases, other people think they've gone far too far. So all of this, on the one hand, is obviously a massive and exciting technology debate, but it takes place within these tectonic plates shifting in ways that we haven't seen.
Broken record moment. Just you know, I keep getting into conversations where so these are the vastly important conversations, and I almost encourage the technologists, and I club myself in with that group a little bit to take a place at the table, but keep relaying the configurable option message. You've got a variety of different ways to play out this technology infrastructure to meet those needs and requirements, and the two conversations have to stay in tune with each other, because too frequently what I'm seeing is the geopolitical conversation is making wild assumptions about the tech and broad blanket, broad brushstrokes, ruling in, ruling out elements of it, and vice versa. Sometimes the tech community taking a far too myopic, mine is the right answer, you change regulation and geopolitical dynamics to meet my design, and obviously both are bad and suboptimal. So the more we can have this be a clear, open, honest dialogue, attracting in the variety of the perspectives, the better. That's the basis by which Chris and I are trying to make sure that the digital dollar project is attracting in that variety of stakeholders' inputs and designs.
Broadly speaking, as someone who's grown up in the late 20th century, early 20th in my professional life, I've witnessed how we've allowed our physical infrastructure, our roads, tunnels, bridges, airports, to age and decay. What were once state of the art in the late and mid 20th century became aged and a need for serious improvement in the 21st. Well, the same is true about a lot of our financial infrastructure, including our currencies. That we've allowed them to age technologically. They're become out of date in a new digital global economy. So when we think about a digital dollar, it's really about it's about bringing it up to date and bringing it into the future. How do we update a currency that really hasn't seen a lot of innovation in a long time? And it's pretty much worked, but at some point, the sheer weight of a global digital economy is going to weigh against the utility. And I think every nation should do the same with their own currency. Every nation should make their currency as up to date, as widely utilizable, both in retail as well as in wholesale usage, as possible. And that's what we're trying to do for the dollar. And I have every respect for every other nation state that seeks to do the same with their own currency, and for private initiatives that put us on our best guard, that point out deficiencies, that point out shortcomings of an analog instrument. In many ways, what Libra has done is pointed out the deficiencies of analog central bank currencies, and has caused us to rethink, or how do we go forward into this digital world with a currency that is as fit for purpose as possible.
Okay, for the OGs in the room, okay? The development of CBDCs, which is all about complete control, centralization, and monitoring, right? Are we actually going down a path that is opposite of what was born 10 years ago?
Well, I don't think they're mutually exclusive. I think these types of ideas create optionality, and then they create sort of application and adoption levels and acceptance levels that could really start to make the entrance of CBDCs meaningful. I actually think, you know, if imitation is the sincerest form of flattery, then a stable coin is basically paying homage to good central banks and to good existing assets, right? And so that the more these networks exist and the more stable coins exist and the more you now start to build infrastructure that's interoperable, I think this is the bridge to a future state of play that is more and more and more cashless, but it also has to become more and more inclusive. And this is the problem we're really, really not solving. So many might ask very hard risks or questions about what are the risks if projects like these succeed? Will you destabilize the global economy and so on and so forth? What are the risks if we do nothing? You know, the UN has a target of dropping remittance costs from 7% globally on average to 3%. And there is not a particularly good idea nor a good way to get there short of large-scale digital transformation and payments and remittance corridors. So you need to have it, it's both. It's not one or the other. To the crypto purists who are long and who have the privilege and the wealth and the opportunity to be completely self-sovereign, they've learned in the last 11 years that when you are in effect your own bank, you carry on your backs the risk of being your own bank. And if you lose your keys, you lose your assets. That's great. I don't want to compete with that market segment at all. It's a completely different space. The opportunity here to scale to hundreds of millions, if not billions of people requires public-private approaches, and it's about optionality, not about removing choice.
We're going to wrap it up very soon. I want to leave a little room for at least one or two questions. But as I was researching you guys, only one of you has a nickname.
Well, sorry, that you know of.
Right, you're right, that I know of. So I have to ask you how you really feel. No, we're all family here. How you really feel about your moniker, Crypto Dad.
Well, my kids love it. But what I would tell you is it came about in the most unlikely ways. I mean, who would have thought testifying in front of a dusty Senate Banking Committee hearing would have resulted in 45,000 Twitter followers calling me not only Crypto Dad, but a few other names as well. But what you realize is you don't ask for something like that, but then it can provide certain opportunities. And
T-shirts?
Yeah, T-shirts.
Merchandising.
Right.
Did you trademark it?
Good idea.
You better now, because it'll be trademarked in an hour.
But when you go back into to your private life, it gives you an advantage to advocate for certain things. And so having had the wonderful privilege of taking a company public 10 years ago and being able to satisfy a lot of material wants and then serving 5 years serving my country, I've reached a point in my life at age 60 where I really want to devote the rest of my public life to advocating for the modernization of our financial system. So in addition to the Digital Dollar Project, I'll also be chairing a joint venture between Freddie Mac and Fannie Mae, looking at the modernization of our home mortgage market. I'm working on another project to develop a Meribor as a replacement to LIBOR based upon real market lending, unsecured lending in the bank market. So I'm focused on areas where we can modernize our system for the reasons I said a few minutes ago. And having the moniker, having a following, it enables me to get the word out about some of these things. So it's a fun thing. My kids love it, but it's also an opportunity to build on that and speak to an audience that might otherwise follow some retired, recovering regulators. So.
You guys all need to get nicknames now.
Well, my nickname is obviously rhymes with my surname, so it doesn't take much to work out what my nicknames are.
Okay, do we have time for a question? No?
I think we've run out of time now.
Okay, oh. All right, how about just one? One?
Yeah, one. Let's have one.
One. Okay.
I'd like to ask Crypto Dad if he sees Libra as an orphan child, or whether he thinks he should be part of the crypto universe.
So my approach to life is as a market regulator. I'm really a student of markets. And I think markets are healthier when you've got a broad range of diversity. And currencies operate in a global marketplace. Every day people make choices as to what instrument to transact. I'm a big advocate, obviously, of the US dollar in that role. But I think that the dollar and other currencies are on stronger footing if there's a multiplicity of choices for people. And the harder they try to get people to use their instrument, the better it is overall for the marketplace. So money has not had a lot of innovation. Suddenly, we're seeing an enormous amount of innovation. I think that's all for the good.
Well said.
Thank you to all the panelists. You've been wonderful. Thank you very much.
Thank you.